Is your market shifting to a buyer's market? Today, we're breaking down 7 key indicators plus a bonus one at the end of what I think is going to happen this year that's going to shift it to a buyer's market. So, the first thing we're going to talk about is inventory levels, also known as months of supply. This is something that you hear a lot on the news or in any type of trending articles. So MOS, not military occupational specialty, okay, it's months on supply, is how many months it would take for all the current homes for sale on the market to sell given a monthly sales volume. And an average is 4 to 5 months is what an average market would look like. Right now, those numbers are much lower. We're typically seeing like a month to 2. So basically, the lower the number is, the lower the inventory, the more buyers, and hence we have prices being driven up. Now, when it's a higher number than this, like 6, 7, 8 months of supply, then you're going to see high inventory, less buyers, and typically you're going to have a lower price point on properties because they're going to continue to drop. Now remember, the stuff that we go over today is a combination of all different things, not just one indicator. You're going to have to kind of combine these and look at your market, and there's definitely tools that are out there. Now, when you have a buyer's market, obviously it makes it a lot easier for buyers to get into the market because sellers are willing to negotiate a bit more. And then this also makes it better for sellers in a way, ironically, because then they can go out and purchase a property if they sell one. Because the main challenge right now that we see for people selling their home is, if I sell my home, how am I going to buy another property? Like that's a pretty big deal. So that's why we're kind of still in this landlocked situation with people not willing to sell their properties. Plus, interest rates are a big factor, but we're going to go over that in a little bit. Now, where you can get data like this is you can look at, you can talk with a realtor. They have access to the MLS, which is a lot of it. You can go to the National Association of Realtors website and also pull data from that. It is all pretty open. And you can also go to places like realtor.com. Second thing we're going to talk about is days on market. So what that basically means is that when you look at a property online, you'll see it's been online for 50 days, 20 days, 10 days, whatever the case may be, and it still hasn't gone under contract, right? A lot of people look at that, and it's also a negotiation tool, because if you see a home that has been listed for 60 days but hasn't sold, now you might be able to wheel and deal a little bit more and get a seller credit, bring the price down. But that is very market specific. And you can also see how long properties stay on the market. Sometimes, like even the place that I bought, I'll use my place. It went up for sale on a Friday and offers were due that Sunday. So that just gives you like 2.5 days basically to look at homes. And a lot of times they'll do, especially in areas where it's still quick, they'll just do like an open house. Everyone comes and then all offers are due, which, pros and cons to all of that, but it also depends on what the market price is. That's why sometimes you'll see sellers asking for a lot more than what the market is, and then they just are stagnant for a long time, hurting themselves. And other times you'll see people put properties at a lower price point because then it will drive a lot of competition. So again, be careful of that. And if competition isn't your thing, then home ownership most likely won't be either. So keep that in mind. So yeah, days on market. Now let's talk about price trends. We kind of touched on that just a little bit before, is that if you're seeing consistent decreases in home values, and that is very widely based on price point as well. I want you guys to be aware of that because you have average price points of homes have gone up significantly in the last couple of years, right? 400,000 is kind of the average. That is the average across the country. And then you have different segments, right? You have luxury homes that potentially are $1 million plus. That's a whole different price trend, and you're paying for different per square foot price for these properties. Don't always think that's the only thing that's driving it. It's location. A lot of factors go into these price trends. But what you want to see is that, is it just 1 or 2 homes in the area where the prices are decreasing? Or is it overall every home I'm looking at, prices are decreasing, which can be a red flag to potentially not buy in that area. But you'll definitely see onesies, twosies price drop I've also seen price increases. That's kind of odd, but it definitely happens. If you know why that happens, drop a comment down below. Would love to hear your opinion on that. But again, this is an opportunity for buyers to get in. But the challenge, I think, sometimes when you see overall markets dropping like we did in 2008, is then you'll have a lot of people on the sidelines that are like, well, I'm not going to buy because the values can keep going lower and lower and lower. There's a point where you have to pull the trigger on this and either buy something or just don't, right? Because those same people didn't buy anything when interest rates were really low. People were the same thing. I'm not buying anything because the rates are, it's too competitive, and then values skyrocket. They miss out on all that, and once again they're like, well, rates are too high. So at some point, this is going to be for you or it's not, and it's all about your affordability and what you can do. Now let's talk about the next thing, the fourth thing, which is going to be sale to list ratio. What that means is when you list a property, let's say for $400,000, and the average for the area would close at $420,000, well then obviously it is a big seller's market because sellers are getting more money. Now, if the opposite happens, you're selling for $400,000 and you're averaging $380,000 as the offer price, then again, it's shifting more towards a buyer's market. And you want to see that ratio because it's a way for you to see, are you really overpaying for a property if you're going for asking price? Maybe just not as much competition as you thought. There's a lot of fear mongering online, and you want to just make sure, look at the facts. It's like when buying a car, right? You can go online, see how many other people are paying for vehicles. And same thing here. You want to see with real estate so you can get a good idea. Are you getting the best deal possible? And yes, it is stressful buying a home because there's so many factors that go into it. And when you find a house you love, you kind of like, how much do I give and take in this? Fifth thing, interest rates. As you guys all know, interest rates have a big effect. Today, though, it's kind of odd. You would think with rates going up as much as they have, that it would have switched to a buyer's market. Unfortunately, that is not the case. People still buy properties, and the mindset is pretty straightforward. If you can afford something today, buy it today. I've said that all the time. I did it myself. I'm not telling you guys. This is not some kind of gimmick. I bought a place myself recently, okay? With rates are where they are. Because the VA loan gives you the option of doing an interest rate reduction refinance loan. Like clockwork, when the rates drop, people will flock and then competition will drive up. So when you sit around your buddies we're all waiting for rates to drop, that is your competition. It is better to buy now and then when rates drop, then to refinance. And again, it all depends on your situation, budgeting, credit, all that's going to have an important role in this. But again, it's kind of an anomaly because normally when rates are higher, you would have that shift to a buyer's market, but we just haven't seen that. We've definitely seen places slow down drastically, even in major areas. But again, this is why you got to be looking for this and seeing what makes sense for what you want to do. Because again, values going down is a bad thing because then that second shift of, should I buy now? Should I wait till it gets really low? Starts to come about. And the other thing that we're going to talk about is economic indicators, which is the sixth thing. This one is important because it could be also political stuff and economic, right? Someone can come out and make a statement, all of a sudden markets go crazy. And one of those things, right, when it comes to economic indicators like employment rates, right? Consumer confidence. So when you see major announcements, the government coming out making announcements about this stuff, you'll see the markets react drastically. Now, sometimes they have lasting effects, sometimes they're short effects. Now, I'll say once a month you'll see the spike in rates because of something that happened in the markets and things will kind of cool down. Right now, I'll tell you that over the last couple of months, things have pretty much been flat, right? We're not seeing rates go up, rates go down. We're just seeing things pretty flat across the board. Good thing, bad thing, I'm not sure. We're going to kind of see what happens. It's an election year. They're talking about dropping the rate, but they say that all the time. So we don't know what's going to happen, just to be straight up honest with you. But watch out for those key indicators, especially when you're in that home buying process. Now, the seventh thing is going to be local factors, right? When we do these videos, we do them on a national level, so we don't like go in, dive deep right into the exact city that you live in, because the dynamics of each place is completely different, right? You could be in a city, but depending on where in that city you are, it's also going to be different. And then also depending on what the state benefits are for, if you have a lot of retirees, right? That's one thing. How do they get taxed? If you have VA disability, do they offer property tax breaks? All those things make a factor for the local area. And either you're going to be micro researching your area, which again, you can use the tools we talked about earlier, or you'll talk with like a real estate professional and you just kind of see like what their 2 cents are on it. Just make sure that you're doing your own research. And then with those local factors, you do have the additional complexity of new construction properties. So that's going to also drive that demand. I've been to areas where the values of homes are crazy high. The local market can't afford to purchase these properties. It's all external people coming to that area, which is an interesting dynamic, because when you're looking at how those things play, because what if people start leaving that area and now the local people can't buy it? Now prices are going to drastically reduce. Because to be honest with you, in this area I'm talking about, homes on average were about $200,000, and now they are about $600,000-$700,000, just making it unaffordable for people that live in the area. So let's talk about this bonus item I talked about a little bit earlier from the, and we're going to talk about the NAR lawsuit. I've done plenty of videos around this, but it's definitely important to know what is happening, right? So sellers agents were offering buyer's agents a commission for bringing them a buyer, right? So basically, this new lawsuit, sellers do not have to offer a co-op to a buyer's agent. Now, buyers could be responsible for paying their agent that fee. VA Loan banned that. They changed that law recently. As of August 10th, 2024, you're able to now pay those fees. So it's another thing to think about when you're going into this. Now, I'll tell you this. About 8 out of 10 Americans live paycheck to paycheck. So a lot of homeowners that purchase properties, especially with VA home loans, well, I shouldn't say especially, because it definitely varies widely, okay, for veterans that are purchasing properties. When you're looking at that dynamic of, you have all these buyers that are out there that currently could buy a property because they don't have to potentially pay this fee. Now we have this fee in place. It limits the amount of buyers there are that are out there. So now sellers that would have all these buyers normally, now all of a sudden are limited to having less than a quarter of those buyers come in. Now those buyers are going to basically dominate that market. So it's an interesting shift because it goes against all the things we just talked about. But if greed, you've ever seen America's Greed, it's a great show. It came out, it was a long time ago. I used to watch it all the time. It's something that I feel like that's going to be the thing that is going to get sellers at the end of the day, is that greed. And then we might see a shift back to having more of a buyer's market when this stuff unfolds. And people just are not going to offer these co-ops. So we'll see how all that plays out, but we'll definitely see what happens. Hit the like and subscribe button, and I'll catch you guys soon.